My name is Maday. I'm head of Fintech strategy and innovation at Moneygram. Today we're super excited for this amazing panel. We have some amazing panelists here today. We got Narvaez, with the founding partner of Rayo Capital. I got your name right?
Yep, perfect. Thank you.
We got Christophe Fonteneau with Request Finance, and of course Jackie Bona, the CEO of Celo. All right, awesome. So just to kind of kick us off, if you guys can just maybe do a quick round of introductions. We'll start with you, Christian.
Awesome, yeah, thank you. So founder and managing partner of Rayo Capital. We're an early stage blockchain accelerator and VC fund. Been in the space for about 5 years now full time, and before that I spent 10 years as an energy investment banker on Wall Street.
Yeah. Hi everyone, my name is Jackie Bona. I'm the co-founder and CEO of Valora. We're a very easy to use mobile crypto wallet, very focused on mobile peer-to-peer payments, so you can essentially text funds to any phone number in the world, and in addition to making it really easy to access DeFi and all the crypto things. And so, yeah, we've been around for 4 years now. Started working on it in 2020 when I was at Celo, working on the Celo blockchain. We've been an independent company since 2021 and used in over 100 different markets. Prior to joining Web3, I was actually working at some of the largest tech companies like Spotify, Twitter, Google, launching products in emerging markets. And so it's very near and dear to my heart. I saw a huge opportunity in the Web3 space to basically make crypto more approachable, more usable to humans, and basically, yeah, kind of break down those barriers. And so that's what I'm doing today, and that's what I hope to continue to do for a long time.
Let's go. Christophe.
Hi everyone, Christophe from Request. I'm one of the founding members. Request is like a crypto invoicing platform that enable any company to pay and get paid in crypto in a compliant way. We add invoices on every single transaction hash in order to make crypto transactions more compliant, documented, integrable in any accounting software in order to make it accepted by the regulator, and finally, make our industry legitimate to the eyes of the authority.
Very cool, very cool. Thank you guys so much. So given the name of our panel, right, which is more about emerging markets, what would you guys say is some of the most impactful change that we've seen that blockchain has brought about? Maybe Jackie, we can kind of start with your thoughts on this.
Yeah, I mean, for me, it's all about access. I think that blockchain technology opens up access to financial tools and therefore opportunity, especially for people in emerging markets. I saw a very similar kind of wave with information when it came to the internet, you know, when it came to like working at places like Google, for example. And so I think that the opportunity is just as big for the blockchain industry. And, you know, kind of our approach and our thesis, you know, starting from Celo, but then continuing on with Valora, is that mobile is actually the way. And so we're very focused on building our mobile-only crypto wallet, and, you know, basically using that as a way to make it super easy and accessible. And this is primarily because most people in the world have a mobile phone in their pocket. It's their only access to the internet. You know, usually they don't have a desktop computer. And so that's really something that we're very passionate about, is like, how do you actually make crypto very easy to use? And again, the approach that we're taking is like making it mobile first, accessible, and like really lowering the barrier to entry.
That's very interesting. I love the way that he said it's more about access. But I guess like with access, right, this is like a line from Spider-Man. With more access comes more responsibility.
Absolutely, yeah.
Right, so Christophe, like from a staying compliant perspective, what are some of the biggest challenges in getting that access, but then still being regulatorily friendly?
Yeah, so the idea is like, as Jackie was saying, when you travel a bit around the world, you have more people. Not everyone has shoes, but everyone has a cell phone.
Yeah.
So like being mobile first, is really important. Now in terms of compliance, we really push this in the sense that companies like Celo or foundations like Celo make this happen, providing a wallet, everything. And then when people have the money in the wallet, they have, or any type of custody, they need a way to be able to spend it. So either you have B2B tools like us, spend management tools, either you have e-commerce platforms that are working on this. And the idea is, on our side at least, in the compliance aspect, is we really want to document everything properly. Because yes, we give a wallet to everyone in the world, but still we need the regulatory instance like to be okay with that. And at the B2B level, the regulator is only happy if you pay taxes at the end of the month or at the end of the year. And in order to pay taxes, you have to maintain an accounting in order like to calculate the proper amount of tax you owe to the government. And in order to maintain an accounting, you have to have accounting evidence to bookkeep. And that's the mission of Request.
It's very interesting.
And then, so on the consumer side also, I mean, to piggyback off the mobile first approach, I mean, it's a very young demographic. The average age in the region is about 35 years old, right? So they're very tech forward and tech friendly.
Yep.
And beyond that, because of the lack of physical banking infrastructure, now everyone has access to a bank via their phones, right? So that allows for applications to leverage blockchain technology to obviously provide credit, something that historically has been expensive in the region. So, yeah.
No, very interesting. But then, like, so clearly the challenge is access, right? And there's so many people without access that are now getting access. But then on the supply side, like, so there's like, that's the demand side, right? On the supply side, from a tools perspective, as Rayo Capital, like, where are you seeing that most builders are going when it comes to opportunity and providing opportunity to users?
I would say from a vertical perspective, we see so I would say keep in mind that, or at least this is what I'm seeing, that from a stack perspective, we're about a cycle behind developed economies. So for now, what we're seeing a ton is basically on-ramp, off-ramps per country, right? Or regionally. We're seeing a lot of applications trying to fractionalize physical assets, real estate, right? So beyond that also, we're seeing a lot of that within the commodity space as well in Brazil, the agriculture space, and then regenerative finance with carbon credits. So that's what I'm seeing.
Yeah.
And I think obviously it's still a space that has to develop, but we're seeing early sort of innings of companies trying to tackle those challenges.
That's very interesting. So usually in emerging markets, right? So I'm from India. I'm an immigrant. I've been here for about 22 years now. Like, one of the biggest challenges that emerging markets have is record keeping, right? So the record keeping is really, it's either not as strong as in like other countries, or sometimes it's just lacking. Like, how does that affect from a KYC perspective or from a validation perspective? Christophe, like, what are the biggest challenges that you have in emerging markets compared to like maybe launching something in the US?
So I need to find the words to say that. In developing economies, the state has the power on the banking system, and like they retain capitals in the country. So whoever you are, you can be an entrepreneur in like an African country, for example. The capital cannot really, and I'm not talking about China, of course, but like, let's talk about like any African country. The capital, there is like the government keeps all the capitals in the country. So if you do like cross-border payments, you're screwed in a sense. So you just like, and crypto is like arriving as a Messi here, like in the sense that it's like changed the whole thing, because the government has like no power on these transactions, and the governments understand that money goes in, money flies out, but at the end of the day, it contributes to the local economy anyhow. So it's also like, crypto is also like a way like to educate the government regarding like this like money retention that they do over like the populations.
No, it's very interesting. I would say a question for you, Jackie. So you mentioned a good thing, Christophe, which is educate, right? I feel like education is a challenge, right? So how does Valora kind of close the gap on taking somebody that, you know, is a very different demographic, different education from that perspective, as in like even like regular education, and then you're educating them about something so like even people like here in the US don't understand sometimes. Like how do you guys like cover that gap?
Yeah, I mean, I think a lot of it is like, since we're focused on emerging markets, and granted, it's like we have, a team that's spread across multiple markets. We're only a company of 25, right?
Yeah.
Like we're using over 100 different countries. We can't possibly cover all of those markets. What we've done is that we've actually partnered with local organizations, local influencers, to really kind of help deliver that message from an education perspective. Because a lot of these markets, like Nigeria, Brazil, they're like low trust markets. And as you mentioned, they're difficult concepts to grasp. We don't want to assume that we know how to approach that. So, just for example, like when we first launched the company back in 2021, we partnered with a local organization in Brazil that was working with essentially, favelas to fight poverty. And so they were actually using our wallet to distribute their UBI program. And they had like local community members actually like teach people how to use the wallet. Why do you use it? And it was actually really beautiful to see because people were seeing value in it. They were also using the wallet to transact with each other and actually using the stablecoin as a medium of exchange. And so it really showed us very early on in our company's journey that like leveraging these local partnerships and these local voices is really what's going to help at least like introduce us into the market. And obviously like, we need to scale those types of things. But I think, that's one of the things that I've learned, over the course of doing this is that like leveraging those local voices so they can speak to these very complex concepts, very scary ones as well, in a much more familiar way and one that is more tailored to the communities that they're speaking to. Yeah.
Christian?
So from an education perspective, something that we encourage our founders is always to don't talk about the technology first, talk about the problem, right? And hide the technology under the hood, leverage existing sort of habits that the user already sort of is accustomed to for them to use whatever it is, whatever solution you have, right? So I think the problem that crypto has, crypto builders or just us as a sector, we live in a bubble sometimes, right? And I think we focus too much on the technology and the infrastructure and all of this, and at the end of the day, the user doesn't care about the technology, right? They care about the solution to the problem that they have. And as long as you talk to them in the language that they understand already with existing habits, obviously the product is gonna sell itself, right? Obviously, and I agree with Jackie 100% that you need to have localized sort of entry points and sort of speak the language in, for example, the region of Latin America, because we do speak Spanish in Argentina, in Colombia, in Mexico, but there's little nuances from a cultural perspective. And if you don't take that into account, you're not gonna, it's not gonna be very welcomed or welcomed in a way that you think you may want, right? For example, Coinbase, if you look at Coinbase's front page, right, it's a dashboard of like a stock market chart, right? And Bito, which is Mexico's exchange, if you look at their homepage, it's all about family, cousins, and like a mom. You get me? So they get it, right? So as long as you have that cultural approach to whatever region you're engaging, I think it sends a more powerful message, and it means that you understand sort of the people.
That's very interesting. There's a reason why we all are comfortable using a card. Like you just tap it, it works, right? And I think till crypto kind of reaches that like very easy user interface where you don't have to think about anything, I completely agree with you that it's a challenge to kind of get the adoption that you want. That being said, we were part of the Stellar Aid Assist program, so where we were servicing Ukrainian refugees using USDC, and I was blown away how quickly they adapted to understanding what USDC was and then just converting it to cash with MoneyGram as quickly as possible, right? So there's a little bit of like, if you hit the right market fit, then they'll adopt it much faster, but there has to be market fit and there has to be ease of use. Completely agree. From a venture capitalist perspective, like you see all these founders coming in, right? What are some of the biggest like challenges that you see that maybe you don't see in other markets that's unique to emerging markets?
I would say historically, venture capital hasn't been a way to finance startups, right? So it's either bootstrapped and or venture or debt focused, right? And I think I would say in the last decade, we have seen unicorns come out of Latin America, about 38 today. And an analogy that I use that I think sort of helps understand what's going to happen in Latin America is the same impact that the PayPal mafia had to the United States, to San Francisco, and how it minted millionaires and more unicorns came out of that, right? That created sort of a hub of innovation and sort of not only for the United States, but for the world. In Latin America, the same thing is happening, right? There's unicorns in Mexico and Colombia and Argentina and Brazil that are having that same impact. You know, they're minting new millionaires. They're training their local workforce and sort of in seeing how you could build companies, raise venture capital, and sort of create wealth. And I foresee that a lot of, and I would say over 50% of the unicorns in Latin America are fintechs. So I foresee those builders going off to implement sort of more optimal technologies like blockchain in the new companies that they build. So lack of venture capital, I think now they have that experience and more, as long as we have more results, more private capital will enter the market. And I think those results are coming, have come. And that's why for us, right, Rayo Capital, it's really important to, you know, understand the language, understand the region, understand the culture, because for me, and this is just a personal sort of take, I don't need the signal of an A16Z. I don't need Sequoia to invest in someone that I truly believe that understands the local market. So for us, we want to be that signal for those founders.
Yeah. No, that totally makes sense. So from a use case perspective, right, I think we're with Moneygram, like we always think about cross-border money remittance. Is that kind of like maybe, Christophe, like what are the most common use cases that you guys are seeing from your side?
So for cross-border payments?
No, just in general, like when it comes to like blockchain and digital assets, yeah.
So on our side, we just see like one little like use case of the blockchain like possibilities. But our main use case is like cross-border payments.
Oh, it is? Okay.
Yeah. Like people are, like we almost process like $1 billion USD of crypto in any crypto, I would say, but like 70% should be like stable coins.
Yeah.
And the biggest use case is like B2B payments, vendor payment, contractor payments, because like most companies after COVID especially become more remote, and you have like vendors and contractors to pay all over the world. The thing is, try to pay an Indian contractor from the US and trigger like a bank transfer this afternoon. We're like Thursday today.
Yeah.
I guess that person won't receive the wire transfer before Thursday next week in his or her bank account. And we've tackled this at Request. We, especially for Web3 companies first, and that's the first use case. Companies having crypto treasury can trigger wire transfer using Request, using their crypto treasury, and that Indian employee gets this afternoon the wire transfer in his or her local bank in rupees, or basically, and this works for like 200 countries in the world. So the biggest use case is payroll, I would say, of contractor payments. And the second, so this was for the crypto native companies. And what the trend we observe now is like, we are being contacted by traditional companies, prop company or prop tech and stuff like this. And people go, I have a office in London and it takes 5 banking days to send my money to Dubai. So from the city, basically, to Dubai. So like 2 big financial places, it takes 5 days. And I'm not talking about like remote city in Indonesia. I'm talking like London and Dubai.
Yeah.
And like this person is willing like to purchase USDC at Circle in order to have crypto treasury, trigger a crypto transfer across the globe for the money to arrive this afternoon in Dubai. And we have more and more. It's just starting, but we observe this trend. Like we have traditional companies that like Google the fact that can I benefit of these super payment rails on steroids? Can I benefit of it? And they figure out the way. It's like, it's interesting.
That's cool. Do you see any challenges from because you're dealing more with B2B flows?
Yep.
Do you see challenges from like a liquidity perspective on in the market?
Not at all.
Really?
No.
That's very interesting.
It's like we have plenty of on-ramper, I would say, and like the biggest one is like Circle for like the businesses. So it's like almost any company in the developed countries could open a Circle business account, but like some other if you're located in other locations, you can purchase like big volume of money, like even through like OTC deals. You can get like $1 million equivalent using an OTC deal. It's like not an issue at all.
Wow, that's very interesting. For Moneygram, like that's one of our biggest challenges that we're trying to solve using digital assets. Is we want to settle our agents that we sometimes do about $5 to $8 million of movement. Instead of having it wait 3 days, we want to settle that night, right? And so we're actually looking at digital assets for a very similar use case. Jackie, like from your side, like is it still cross-border? Is it cross-border, or do you see more use cases? Are people like do you see the need for more complex things like staking or getting some kind of interest-bearing yield or something like that?
Yes and no. What we do see from the Valora side is, yes, we do a lot of cross-border payments, but actually with a lot of the markets that have been very active, especially kind of, during the bear market, was actually markets, high inflation markets like Nigeria, for example, are just simply wanting to get access to stablecoins easily. And so they get access to CUSD, USDC, USDT, et cetera. They hold, and we've also spun up different stablecoin earning programs where you can like easily earn, whatever percent on those earnings, and those have been going very well too. So I think it's just a lot of the use cases that we see is simply just hedging against inflation because their currency is being devalued. That happens, quite a bit in other markets like Argentina, even in markets like Brazil where the economy is not as volatile, but still want access to dollars.
There's still demand for US dollars.
So that's a big use case we see. What's interesting is that once they do get into the wallet, in the wallet we have like a really easy to use kind of like explorer page where you can kind of take a look at a bunch of dApps, and we see people spend time, sometimes up to 40 minutes, just like browsing and kind of exploring all the different dApps in the in our wallet. Everything from like, a Uniswap to, kind of lending protocols, et cetera. And, but, I think the opportunity is to get them to transact, but sometimes, and this is our hypothesis internally, is that it takes money, like a lot of money to participate in these DeFi pools, right?
Yeah.
And so granted, it's like some of the dApps that we see in Celo have more, less barrier to entry, but if you look at something like, if you want to join an Ethereum pool, not only do you need the ETH to pay for gas to be able to do that, but also you need significant amount of assets to be able to participate in that too. And so I think that that's an opportunity for people in emerging markets where it's like, they seem to be curious in it, but it's like haven't taken the leap, and so why? And so that's something that we're still learning and working through. And again, our hypothesis is like, well, scary, but it's also, you need quite a bit of assets to be able to do that. So I don't know if you guys have any thoughts on this, but yeah.
I agree. Inflation hedge is definitely sort of one of the initial use cases. I would say I've also seen, similar to fintech's cash advances, but leveraging blockchain technology. I've seen that a lot from a B2B perspective. Some companies are doing that in Colombia, in Mexico, but I would say the major one would be the inflation hedge for sure.
That's amazing. But do you see builders trying to offer other key functionalities? And I guess like how are they differentiating themselves? Because if you looked at like a portfolio of 10 founders, right? Like how do you see these founders in emerging markets maybe differentiating? Because not all of them can offer the same set of features and have a unique selling point,
For example, we invested in one that does FX hedging for SMEs in Colombia, right? So they're helping local flower producers that have exposure to Ecuador, to Colombia, and Panama sort of be able to have a product that usually banks won't give you because you're not big enough, right? So that's another way that the technology is being leveraged, and I think again those local needs are known by these local builders, and I think attacking something like FX hedging is something that sometimes maybe here in America we don't think about, right? So.
Yeah. It's funny, like during the whole 2 to 3 days of the conference, right? The most common theme you hear is most of us that have the good fortune of living in the US, like half these problems we don't even think about, right? Like, what is the current rate, FX rate? Like, I don't know, like you don't keep track of that. But you walk into Argentina, everybody knows what today's FX rate is, you know?
I'll add something else, right? And I would say in developed countries, we build for the people that have access to internet, that have access to, you know, the privileges of life that we all have, right? In South America or in emerging markets, I would say builders build for the 90%. Builders build for the masses with real world needs, right? And I think that is sort of the edge that sometimes capital allocators in developed nations don't have that eye for, because you don't live it, you don't think about it, and that's just a blind spot that people have. So I'll add that.
Yeah, no, for sure. And like, it's funny because we often think about like access to financial services, but what they're missing is just access. Like, not even like to financial services, they're just missing access at that point.
I agree with Chris, like 200%. Like I'm gonna put like the foot in the door. Crypto is gimmick for most of us. It's like something gimmick.
Yeah,
we don't need it to survive, right? We don't care, because like in Europe, in the US, like it's like an additional like gimmick stuff to make some yield and on money that we already have, right? In some other countries, developing countries, it's a must. It's like in developing economies, like I have like a lot of users from Argentina, and like they know the FX rate, yes, and they use crypto to build their service abroad and to get paid, just for like the government not to take all their money. And like it's a way to survive. It's a survival question. So they don't care about like having a Bored Ape or like having whatever NFT and stuff. It's gimmick. Like here we're talking about like survival, and in this sense Celo is super useful because it's targeting an audience for who it's essential to have something to transact and on everyday basis. And for us, even our own use case, which is like making cross-border payment faster for like developed economies. I mean, it's nice, but it's like you could survive without it.
I'll add to that. I would say, we want to say something?
No.
I would say in emerging markets, founders, they can't afford to chase narratives. They have to build something that works. So I'll add that to that. Yeah.
That's a great statement, by the way. Speaking of that, right? So Jackie, Valora has seen amazing progress in like Latin America and Africa. Like, if you were to kind of give some advice for somebody else coming down this path, like what's kind of like some strategies that have worked for you guys that you could share?
Yeah, sure. I'll break it down into like 3 main areas, which is kind of like the awareness, like how do you get your word out there, onboarding, so how do you make that as smooth as possible, and then activation. And so like once someone's ready to sign up, like how do you get them to cash in and deposit money? I kind of touched on the first part with the awareness driving part, is like utilizing local voices. And so one of the things that we did in Nigeria, for example, was we developed an ambassador program. And so we basically have community members that, you know, are either kind of just amateur content creators or people that are, you know, very passionate about crypto. I mean, they'll do things like do little meetups, they'll create their own types of content. And it's been great for us because, again, it's like helped our team scale, right, in that market, but also it helps provide like that local touch and that local voice, especially in a very low trust environment. There's like so many, you know, there's so many scams, like, you know, their own currency is being devalued so much. And so, you know, leveraging those local voices to help get the word out, to help build trust, and to also just give us a sense of like, you know, product feedback, right? Like there are certain things that we need to do. Like early on, this was like beginning of last year, where we started seeing a lot of traction in Nigeria and we started to focus on it a bit more. You know, we did a research trip there and we basically learned like, hey, you know, what you're actually displaying in Valora is not the actual rate. There's like a black market rate and there's a government rate. And so we really didn't know that. And so we, kind of worked with, our kind of ambassador crew just to get more product feedback to actually display the rate. So it was like more palatable for people on the ground there. So I think that again, leveraging those local voices and, you can hire someone there. You don't have to do an ambassador program, but I think having some sort of local presence in some way, shape or form, and you can do that in many different ways, helps with building trust, generating awareness, et cetera. On the onboarding side, we try to make it as easy as possible, but I think it really matters to have your app localized, and that's kind of a no-brainer. But
common sense is not so common.
Exactly. So we're localized in 13 different languages, but I think the thing that we notice is that we do our part, but at the same time we get feedback from users that are we signed up for the wallet, and then we try to connect to a DApp, and sometimes the DApp is not localized in Spanish or Portuguese. And so I still think that there's a lot of opportunity for Web3 projects out there to follow that suit, but obviously not everyone has resources or maybe is not as focused on that, but even simple things like that. I think from an onboarding perspective, I think, definitely kind of smoothing out the process as much as possible, having, the language and kind of taking in that product feedback from local users helps with smoothing that out. On the activation side, this is where people actually cash in, right? They want to top their wallet up with some crypto. We have, various on-ramping options. We work with the big global players, but what we've realized is that actually working with the smaller local companies in whatever emerging market is what's going to be the most effective. And so whether that's the funds get deposited more quickly, the rates are a lot cheaper. We've just learned by partnering with local organizations and companies on the ground, and so that's kind of why it's actually really great to be connected to someone like you that kind of knows early stage companies in those emerging markets will help. And so I think that making sure that you're kind of looking at it from a very local point of view, but on a global scale, obviously, from the awareness, onboarding, and activation point of view. Yeah. And so that's what we've really seen success in.
That's amazing. Yeah. From a B2B perspective, Christophe, what do you see something different, right, from your side?
Yeah, it's it's really important on our all these onboarding are quite let's say easy, and still same story. If you want to go through a KYB process in the developing countries, it goes really quick.
Yeah.
The KYB process in a developing economy is also complicated. So it's onboarding of people. So if we can talk about activation in this way, but the onboarding on people is quite challenging in the developing economies as well.
I can imagine. So, go ahead.
Oh, no.
Okay. So the last question is that I want to kind of tease out is how can traditional fintech companies, and this question is going to start with me, is how can traditional fintech companies leverage blockchain and digital assets? And it's not easy. I'll start there, right? It's not easy for traditional fintech companies to do that. But we at Moneygram, we've been on this journey for 2 years. We launched our Stellar, our on and off ramp program on Stellar. Called Moneygram Access, that allows people to go from cash to USDC and then from USDC to cash in 180 plus countries. But it's really leveraging our existing rails that we already have, that we've built over the past 80 years as a remittance company. But the true value we see is everything that you guys said, which is, okay, blockchain is a real technology that does provide transparency, does operate 24/7. These digital assets do provide real flexibility to the receivers. I'll give you an example. So a traditional remittance is I send to you and then you receive the money and that's it. Everything is done. Whatever, you could go pick up that money 10 days from now, the FX rate is locked in, you have no flexibility. And when we started seeing the real value of using something like USDC, the fact that Jackie can hold on to the USDC, cash out a little bit today, pay rent, cash out some tomorrow, pay for groceries. Like that's empowering the user way more than just like one transaction. And that's the kind of the value that we see, and that's why we're really down this path where we're offering on and off ramp services. We're launching our own custodial wallet in August. And we're actually providing our users in the US with a way to buy in whole crypto. So go ahead, please.
I could go on for hours on this, but I would say in general, and like I think I shared this with you before, I started my career in credit, then went to corporate credit, then investment banking. And basically I just saw how broken, old the infrastructure is. Most of the banking rails around the world, not only just in America, sort of come together through M&A, acquisition, right? Different systems talking to each other, don't even talk to each other or can't integrate, right? So I think in general, instead of trying to, do what financial institutions have been doing, which is trying to do plug and plays, I foresee those that sort of either via their corporate venture capital arms or innovation labs sort of start investing in these crypto native companies would be a good way to stay in touch with how innovation is progressing and how it could help you revamp your rails, right? And I think even fintech, right? What's fintech? Fintech is a pretty front end with existing rails in the back.
It's true.
So fintech in itself, right? I foresee a lot of them either doing the same thing, like creating partnerships, integrations, and or I do see a lot of M&A happening the next like 18, 24 months, both from TradFi, fintech, into the blockchain space. So yeah, I mean, I could go on for hours about
No, that's very true, right? At the end of the day, in TradFi, only messages move back and forth. Actual assets don't, right? And for the first time, assets and messages move. Christophe, your thoughts for our last minute here.
Yep. So like it's all about like education. To come back to this, I remember having like seated at the European Central Bank and Accounting Norm Authority. It was a way too earlier.
Yeah.
And now I think like everyone got like more informed. Everyone is more mature as well. And like the fact that we document everything properly now, that the crypto, even the word crypto is like a bad word. Like crypto and Bitcoin, remove this. Let's talk about digital assets.
That's right.
Okay.
Yeah.
So let's make the money digital, so it doesn't like hurt anyone, especially the authorities. So these digital payment rails that we are using today are making the economy more efficient. And this kind of pitch is working really well with like authorities. It works well with accounting authorities because now they can bookkeep the transaction that they were not understanding a few years ago. They have like human readable evidence. The auditors like PwC and Deloitte can audit this account and audit the accounts on behalf of the government. So the necessary milestone, let's say, to have is like finalize educating those consulting and big four firms that always put the nose on your accounts on behalf of the government, just to see that your accounting is good and you're gonna pay the proper amount of tax. So these companies acting on behalf of the government are the closest people you can talk to educate the government itself. So if you go yourself as a startup, like Celo or whoever, directly to the government, it's like you're gonna find like a X years old person that's gonna judge your project. Oh no, I don't get it, like keep moving. Now, if you talk to their ambassador, like the tax collector, okay, the big four firm, and educate these people, and these guys want to be in the trend. They want to look cool, they have suits, but they would like to wear shorts. So they want to be in Web3, in digital asset industry. So if you explain them the way it works, educating them how digital asset can be legit, compliant, compatible with current economy, and then they're gonna spread the word for you or for us to the authorities. I think it's a good way to educate the world.
I love that. I love that. That's a great way to end. Basically what we're saying is education is the key here, right? So thank you all so much. Thank you for your insights. Thank you, audience, for your time.
Thank you.
Thank you.
Awesome. Good stuff.